Welcome to TMS Insights. Ben Clark and Jeremy Hook bringing you a special edition regarding international equities. We've been talking for a little while about investing in the US. We've been doing it for clients for a long time, various means. Particularly of late, though, we've been focusing on a number of particular companies, and whether you hold those through things like Magellan or other vehicles or hold them directly, the US reporting season for the second quarter is now complete, given July is over, and we're looking forward to bringing you some of these stories. Ben, as we know it, the results were pretty good from the US second quarter reporting. We think, against expectations, many companies, about 70% actually exceeded expectations on revenue, at least.
Yes, absolutely. Yeah. I mean, look, it was another story in America where the beats on profit were much stronger than the beats on revenue.
Yeah.
And that goes to companies are still doing very aggressive on-market buybacks over there.
Right, yeah.
So we're seeing stronger earnings per share growth than revenue growth. But the revenue growth was still good. I think 58% of companies beat on revenue.
Yeah, and 70% on profit. That's right. So that was significant, and again highlights, again, the market's run a long way.
Yeah.
So people will be wondering, well, what's next? Well, if you can keep growing your earnings in a low interest rate environment, there's still plenty of upside potentially.
Yeah. Because I think now we've got the fresh earnings numbers have come through. The market in the US probably is trading on an earnings multiple which is about 10% above the historical long rate.
Yeah.
However, interest rates are lower than the historical rate and are coming down again. The Fed cut last night,
right.
And therefore you will pay a higher PE in a lower interest rate environment. So the market doesn't look excessively sort of valued over there. And as we sort of said, there's still some pretty nice numbers coming through.
So the weighing exercise that we talk about in the Australian market of lower rates equaling higher equity and growth asset prices relates, of course, to the companies we're going to talk about. Let's get into them. Apple reported last night good numbers, beat the market expectations.
Yep.
The balance sheet's strong, $210 billion of cash.
It's not bad.
It's pretty handy. Apple, better than expected. That was good.
Yeah, no, look, so they've actually surprised the market by guiding for much stronger sales of the new iPhones that are going to be released in the next year. And I think that came as a surprise because Apple is seen as one of the tech stocks that could become a real jockey point between America and China because it does sell a lot of product in China and China could very easily sort of put a stop to that.
There was an amazing figure there on the wearables, which are the AirPods and the Apple Watches and the Beats, world's most popular watch under there. Yeah. But growth of 48%.
Yeah.
And dominating. Interestingly enough, Fitbit reported, who were a market leader a little while ago, and they got decimated too. Yeah. So Apple's really made a good play on that one.
And I think just will inevitably own that space. So, diversifying into new areas, but still the crown jewel of Apple is the iOS ecosystem through which all of these devices operate and are linked in. And it becomes a very, just an ever-increasing entrenched sort of business in that environment.
Yeah, definitely. Facebook, really amazing. Its share price has gone up about 50% this year, hasn't it?
Yeah.
So, but Ben, lots of levers of growth there. Possibly one of the most interesting and better results.
Yeah, I mean, it was masked by Facebook has obviously had a rocky year, which is why the share price move's been quite surprising. But I'll just reel off a couple of statistics. There's 1.59 billion people who log on to Facebook every single day and about 2.4 billion people who look at it every month. So we're talking about, sort of 25% of the world's population. It's just extraordinary. 2.1 billion people look at Facebook, Instagram, or WhatsApp every single day, which are the three businesses that Facebook owns. And they saw 28% revenue growth, which is an extraordinary number, particularly for a business that's trading on about 21, 22 times EV to EBITDA. However, their costs were up 66% for the quarter.
Employment costs were pretty high, weren't they?
So they're now employing 39,000 people. That went up 31% in the last year. They hired about 13,000 people in the last 12 months. But the main thing on the cost side of the business, two things. Firstly, they had to pay a $5 billion fine to the FTC.
Which they'd provisioned for more or less, and the market was
one-off.
actually happy with that.
Yep.
Yeah.
And the other thing that they did call out is that there will be an increased cost base from the privacy issues and these sort of things. They are having to hire people to overcome these issues. And so that meant that the actual earnings growth wasn't great. But if you look through, you look at that revenue growth, and I always sort of say with this one, bear in mind that Instagram and WhatsApp really isn't being monetized at this point, but will be at some stage in the future. Is still very good outlook.
And when you hear the company name Facebook, you've got to remember WhatsApp, and you've got to remember the opportunities. Instagram, that's an amazing opportunity set there. And just before we touch on, say, Google and Amazon, talking about this antitrust issue, it is an issue, but I think it'd be very easy to over-quantify it. It'll probably end up being something, like the privacy penalty there that we saw for Facebook, that we move on relatively quickly from.
Absolutely. And Hamish Douglas at Magellan has spoken widely and with, I think, a great deal of knowledge in this area. And you've got the concern about tech in America. You've then got a tech arms race that is occurring between America and China that American politicians are very aware of. And although these companies are going through issues at the moment, you just can't see US politicians or government or regulators wanting to stymie the growth of these technology businesses at the expense of Baidu, Tencent, Alibaba,
Correct,
which will come in over the top
Yeah.
and create huge issues for the US economy.
Yeah.
So it's a bit of a push and pull thing, but you could sort of say that these sort of issues are creating potentially a good buying opportunity. These stocks would be trading a lot higher if they weren't.
It's got to be an odd Congress that does these kinds of antitrust and difficult measures to American companies in the face of a pretty important trade negotiation period. So let's get into Google, which, fantastic result again, but the buyback. So, they've actually approved another $25 billion buyback in this result, which comes back to that point about EPS growth we were talking about. What an amazing stock!
Incredible. I mean, this was the best of the Amazon, Google, Facebook. This was the best, I think, of the results. These guys had a fairly poor quarter the quarter before, but this was actually the third strongest quarter in the company's history in terms of revenue growth. Their web search business grew revenues by 28% in the last quarter. YouTube grew by 32% in the last quarter. So, these are huge businesses.
What they've grown to get numbers of that sort of kind upon previous growth is incredible.
Incredible.
Really. Yeah.
Google's releasing around 100 new products every quarter. So, again, with Google, with Amazon, with Facebook, and with Apple, I think that the value in these businesses is there's small businesses which are being incubated and grown.
There's a lot of optionality in those, isn't there?
Exactly.
And a lot of innovation that's coming through. For example, Amazon, moving on to that, just moving to one-day shipping in Prime is incredible. And that's already delivered, it was only last quarter, very good results.
Yeah, so Amazon beat the street, on a revenue basis. However, its earnings fell short of expectations. And that was because in the last quarter, their freight costs increased by 36%. Now, that's being driven by Amazon's decision that rather than 2-day shipping, one-day shipping, they want to do same-day shipping. So if you're an Amazon Prime member and you order something before 11 o'clock or 10 o'clock, you will get that package before the end of the day. So again, this is, I think, a classic case of these companies being willing to sacrifice short-term profitability to become the winner takes all.
Yeah, exactly. And it's not just tech too. Procter & Gamble reported, and they wrote $8 billion off Gillette. Maybe the internet entrepreneurs aren't shaving and leaving a bit of stubble around, but either way, $1.10 of earnings per share beat the street again. So this is a consumer goods business which is finding ways to grow as well.
Absolutely. Yeah, and there's a lot of, again, huge barriers to entry in these businesses. And I think, when we went to the US, and I think the tech conference we went to is what sparked our interest in some cases in this. But the valuations of these businesses in many cases look much more appealing than what we're seeing in our locally priced stocks.
Well, we call them the wax stocks in the Australian market, and we know that the FANG stocks are probably ultimately cheaper, which is not sensible given the scale and opportunity set that these FANG stocks represent. So some really exciting things there. Berkshire actually releases its on Saturday morning, so which is interesting. We'll be watching that mainly for how much buyback activity they've done, Ben.
Yep.
Because that stock's actually underperformed. It's only up 3% for the year.
Yep.
Against a market up almost over 20%. So
Yes.
that's, and again, a reason why we'd like to buy it, because
Yeah.
its cash balance has grown, but we'll be looking for a few signals in that result.
And what they've been active in the last quarter. I think Berkshire is not rapidly, but it is morphing into a business which is more reflective of the overall US market. And of course, they really ignored the technology revolution for many years, and both founders said to our disdain for ourselves, that we missed out. We saw what these businesses were doing, and Charlie Munger said we sat around and sucked our thumbs. So, Berkshire is now the largest shareholder of Apple. It is Berkshire's largest investment, and they have started buying Amazon shares.
That's right.
And it will be interesting to see if that's continued into the current quarter as well. And
we'll plan to give you more updates generally every quarter after the US stocks report. But that's all we've got time for today, Ben, and thank you for listening.